Hello everyone, and a very warm welcome to our seminar on the brand new Windsor Agreement. My name's Tim Sarson. I'm Head of Tax Policy for KPMG in the UK, and I'm going to be your Master of Ceremonies today, guiding us through this big new event. As you've all seen, last week the Prime Minister Rishi Sunak and EU President Ursula von der Leyen have announced a new agreement on Northern Ireland trade, known as the Windsor Framework, which replaces the existing Northern Ireland Protocol. And the aim of that is to seek to alleviate some of the issues that traders have been facing, like administration, additional costs and uncertainty, as well as to alleviate some of the concerns that the unionist part of politics in Northern Ireland have been expressing on GB and Northern Ireland relations. So today we're going to be looking at what this new framework means in practice for traders who are crossing both the Northern Ireland Republic border and most importantly the Northern Ireland GB border. Delighted to be joined today by Becky Okuda, who's our Head of Trade and Customs, and Lorenzo Rossetti, Director in Trade and Customs, who are going to be unpacking what the customs elements of this framework are likely to look like in practice. And we're also going to be hearing from Frankie Devlin, who's a partner in indirect taxes, so VAT and customs, based in KPMG in Northern Ireland, so right at the sort of the forefront of what's going to be happening here. And he's going to be talking you through the VAT changes that the framework is going to be delivering. We'll leave lots of time at the end of the session for your questions, so please do share them using the chat panel on the right of your screen. I'm sure probably most of you are very familiar by now with the SpotMe platform that we're using. If you're not, we'll be using the chat box as we go through to share some tips on how to get the best out of this event. So I'm going to kick off with a little bit of a layperson's summary of sort of where we are, how we got here, before we get into the proper technical detail with the experts, but just sort of setting the scene essentially. Now, I'm sure you'll all remember back in 2016, UK voted to leave the EU, and one of the most important and trickiest bits of the negotiation relating to Brexit were the trading relationships between the Republic of Ireland and Northern Ireland, and between Northern Ireland and GB. In simple terms, it was really easy to trade between Northern Ireland and the Republic, and between Northern Ireland and GB, of course, before Brexit, because we were all in the EU, we were all party to the single market rules, we were part of the customs union, so there were no checks on, and there was no customs paperwork involved in cross-border transactions, or they weren't even really cross-border. When Northern Ireland left the EU, along with the rest of the UK, we needed a deal that was going to essentially prevent checks being introduced between the Republic of Ireland and the North, because based on what had been agreed at the Good Friday Agreement, and obviously the need to preserve mobility across that important border, there was no way that we could start introducing border infrastructure along that land border. It's a very sensitive issue. So what the Northern Ireland Protocol did essentially was it moved the inspection and document checks, all the sort of border infrastructure, to the ports in Northern Ireland rather than taking place at the Republic of Ireland border. And what that meant, in effect, was that goods travelling from GB to Northern Ireland were going to be subject to checks. There was also the fact that Northern Ireland was remaining, for practical purposes, within the ambit of both the EU Customs Union and the single market. And because of that, it meant that certain EU laws continued to apply to Northern Ireland with no ability at Stormont for politicians to have any say in those, and ultimately jurisdiction of any disputes to be with the Court of Justice of the EU. So that was sort of what was considered wrong with it. Essentially, this was difficult to accept for unionist politicians, so the DUP, who haven't been participating in power sharing for some time as a result of this and other things. It sort of paralysed the Assembly. It was also creating trouble and friction for traders across the Irish Sea, and sort of little, or what might seem like little, but important things like the fact that fresh sausages couldn't be moved or imported from Northern Ireland to GB were a sort of symptom of the fact that clearly there was friction at the border. What the Windsor Framework looks to do, and the reason why this is different, is twofold. So one of the things it's doing is it's removing a lot of the paperwork and admin involved in cross-Irish Sea trade, specifically for goods that are destined not to leave the United Kingdom and end up in Republic of Ireland. So we're moving to what's called a green lane and a red lane approach, and my customs colleagues will talk through that in a bit more detail. That does reduce significantly the amount of checks and paperwork, particularly for companies that manage to get into a new trusted trader scheme. The other thing is something called the Stormont break. This is more political, but essentially what that's saying is that if there is divergence between EU rules and UK rules in future on goods, and that divergence is considered to create significant political problems, then there is the opportunity for the Northern Ireland Assembly first, then to be ratified by the UK, to exercise a break on the operation of the Windsor Agreement, the so-called Stormont break. So that's the sort of the overview and what this is all about. I'm now going to move to Becky, who's going to start taking you through some of the details of what this actually is going to mean for traders in practice.
Thanks, Tim. So what does the Windsor Framework mean in reality for customs and the movement of goods? Well, we hope it means a smoother and less burdensome process to move goods into Northern Ireland, but the management of data and compliance behind the scenes will probably be key. But a little bit like pre-Brexit days, the reality of how practical or complex this might be to manage has yet to be released in full. So while we don't proclaim to have all of the answers, today's session is designed to give you our thoughts on the practical implementation of the agreement and to get people thinking about what that means for you and your business. Ultimately, what we want to help you to do is get ahead of any last-minute planning, and given the level of UK customs audit activity recently, some of the practical tips we might give you will probably form some of your FY23 plans anyway. So let me start by recapping on some of the key points. So Tim mentioned before, so the framework sets out a new system of green lanes and red lanes, and this will effectively ease the flow of goods from Great Britain to Northern Ireland. So goods shipped from Great Britain, which are staying in Northern Ireland and are not at risk of moving to the EU, will use the green lane at Northern Irish ports, meaning they shouldn't have to be physically checked and will require minimal paperwork. Now, only trusted traders will be able to use the green lane, and this scheme will be open to companies based anywhere in the UK. And I'll be covering the trusted trader scheme in a little bit more detail later in the session. And for those goods at risk or destined to move to the EU, regulatory paperwork and full customs declarations will be required, with EU tariffs probably likely to be applied. These goods must travel through the red lane. But how do you deem whether goods are at risk? Well, it's pretty similar to the protocol and focuses on two key points. So number one, goods brought into Northern Ireland from outside the EU that will or are likely to be subsequently moved into the EU. Or number two, goods brought into Northern Ireland from outside the EU that are subject to commercial processing. But the welcome news is that the definition of non-commercial processing has been expanded. So for example, where the processor has an annual turnover of less than £2 million, or where the processing in Northern Ireland is for the sole purpose of the sale of food to the end consumer in the UK, and for other specific sectors such as construction, healthcare, animal feed, and not-for-profit activities. So where goods are classed as not at risk and you are a trusted trader, you may gain the benefit of accessing the green lane and no duty should become due. And the same benefits should also apply whether goods are brought into Northern Ireland that attract a 0% rate of duty under the EU tariff, or for certain conditions in respect of parcels, which again Lorenzo will cover in some more detail later on. The other good news comes in the form of regulatory controls and paperwork. So, for example, retail products for end consumption in Northern Ireland will be able to move from Great Britain with minimal certification requirements and controls. UK public health standards will apply for those agri-food retail goods for end consumption in Northern Ireland, whilst EU plant and animal health rules apply, remain applicable for the protection of the EU single market. And the requirements for agri-food movements will now be limited to, so number one, use of a general single certificate for mixed loads of agri-food goods. Number two, identity checks will be drastically reduced, eventually, we believe down to 5% when all safeguards are in place, and the physical checks to be carried out on a risk basis and intelligence-led approach. And finally, there will be new labelling requirements that will be introduced over time. So all of that combined, I think for us, reading between the lines, we believe that goods that are moved by trusted traders in Northern Ireland may still be subject to simplified customs declarations, including a reduced number of data elements. So potentially provided by access either to your systems or through EU representatives that will need access to those declarations. They'll achieve that through a dedicated IT system. So I think the messaging from us on that point is probably data accuracy and compliance is absolutely going to be key. So to recap, goods shipped from GB, which are staying in Northern Ireland, or goods subject to processing in Northern Ireland, where the processing is deemed to be non-commercial, are likely to be classed as not at risk. Now you just need to get trusted trader status. But how does the trusted trader scheme work? Okay, well, let's start with who can apply. So businesses that are registered already under the existing trader scheme, operating under the protocol, should be able to automatically roll over their registration into the new scheme, which is due to be up and running by the 30th of September of this year. Otherwise, there are probably some establishment criteria that you need to meet. So either you must be a business established in Northern Ireland, or you must be able to demonstrate that you have a fixed place of business in Northern Ireland. So with human and technical resources that are permanently present from where the goods are sold to or provided for final use by end consumers, and where customs, commercial and transport records and any other information that's required are available and accessible in Northern Ireland. Alternatively, if you are a business established in parts of the United Kingdom other than Northern Ireland and fulfill the following criteria, so a little bit similar, customs related operations are carried out in the United Kingdom, you have access to an indirect customs representative in Northern Ireland, so for example, the Trader Support Service or TSS, and your customs, commercial and transport records and information, again, are available or accessible in the UK, and that's to HMRC and probably where required EU representatives, and that's likely just to be verifying the compliance. Now, in addition to that, you must also be able to demonstrate that you intend to bring goods into Northern Ireland solely for the sale to or final use by end consumers in the UK, including where those goods have been subject to non-commercial processing before their sale, again, to or final use by end consumers in the UK. And in the case of a sale to end consumers in Northern Ireland, you must be able to demonstrate that you will undertake that sale or it will be made from outlets in Northern Ireland from which physical kind of direct sales are made to the end consumers. And I think for us, it might be this last point which will probably give rise to concern. I think if at the time of moving goods into Northern Ireland, you're uncertain as to where the end consumer may be located, will you now need to include more stringent know your customer or KYC checks? Will existing contractual arrangements need to be amended? And what level of audits are going to take place by the authorities to check this, given kind of the level of data sharing? Now, we think there could be some goodwill here, such as apportionment or perhaps even a simplification process to declare goods at risk at a later date. But I think with the direction of travel that we're seeing in the customs world, focusing on technology and data sharing, we wonder whether some level of blockchain or tracking could play a part here. And similar to authorized economic operator status, or AEO, which I know lots of people would have heard about during the kind of the Brexit planning days, trusted traders will also need to demonstrate some level of kind of AEO criteria here. One of those things is financial solvency, which is likely to require your business to demonstrate you have a good financial standing during the 3-year period, either before the application or since its establishment, if less than 3 years. The business is also going to have to demonstrate a clean bill of customs health in respect of compliance. So as long as there's no serious or repeated infringements and no record of serious criminal offences, then you're probably safe on that one. But we'd still recommend that a customs health check is probably undertaken before you start to kind of go through the application process, as it's likely that the authorities will probably do that anyway as part of their considerations as to whether or not you'll be accepted. And I think what will be really, really important is being able to demonstrate the processes and controls your business currently has or will put in place to manage the operations and flow of goods into Northern Ireland. And that needs to be in line with the rules covered by the framework. So effectively, this will probably focus, or it should focus, on the full end-to-end audit trail of goods, moving from GB to Northern Ireland and to the end consumer. I'd expect this to include things like retention of contracts, commercials, transport records, potentially receipts, potentially the goods receipts, goods issue reports, whether that's in your warehouse management systems, and just more generally how you track data, all of the elements that you're going to need in your ERP system. Now, whether that will stretch as far as having to demonstrate your approach to IT systems controls, such as restricted user access, etc., we're unsure, but that would follow a similar theme to an AEO application. But I feel like even though there are still some unknowns, there's some actions you can start to take now, even if it's just these 3. So first of all, make sure you're clear on the rules associated with goods at risk and consider how you would implement those processes to manage it. I think the next stage is to then consider how you currently move goods from GB to Northern Ireland and document a step-by-step process to determine if you need any further current standard operating procedures, if you need to update them, who do you communicate these to? So for example, your hauliers, your customers internally. And I think finally, it's probably a customs health check, just to make sure you've been compliant in the last 3 years. And UK MSS import and export data is readily available for you to do that. You just need to order it with HMRC. So now that we're clear, or I think we're clear, on goods at risk and the trusted trader scheme, how might the green lane work in reality? I'm going to pass you over to Lorenzo.
Thanks, Becky. Yeah, let's talk about the green lane now. Don't think of it in terms of trying to get that extra bottle of booze through the green channel at Heathrow when you get back from Marbs. The green lane is in terms of the process, is all about reducing that paperwork and official control. But as the EU have said, it's not going to eradicate the need for some kind of declaration. That's a key point to remember. Now, I'm going to read this because I'm quoting from some of the documents that the UK and the EU have published. And if you look at the UK side, what they say is the movement will use ordinary commercial data with information provided to TSS based on data from sales invoices and transport contracts. These new arrangements for the smooth flow of trade within the UK internal market, and that's a new term essentially, are underpinned by data sharing and technology. So we're talking about the issues that Becky touched on. This will ensure that there is real-time data on goods movements to support risk analysis, and that's important as well. This isn't after the event. This has to be real-time or close to real-time, removing the need for the extensive bureaucracy and checks that will continue to apply to goods moving into the EU. So the green lane is all about reducing that burden. As Becky suggested, this could mean blockchain distributed ledger technology. And from my perspective, that's probably correct for some industries, maybe the food industry, where there's a requirement for that sort of traceability going back through the production chain. But if you've been involved in customs for as long as I have, and clearly I don't look old enough, you will have seen blockchain been mentioned time and time again. If it actually works for this process, then we just have to wait and see whether that happens. The EU talks about 25 data elements. But the key here is that there are no commodity codes involved. Trusted traders will be able to lodge their list of products with a description. And again, this is from the EU side rather than the UK side, but the EU side are saying that that list of products and the list of commercial descriptions, HMRC will help the trader classify, but classify at the 6-digit level. So at a higher rather than a lower level of granularity, so making it easier to classify products essentially. But it does talk about that list being lodged with the authorities. And if it's lodged with the authorities, you as an importer, as a trusted trader, will not have to declare a commodity code on whatever this declaration might be. And it's the authorities that will do that translation. But if you don't have that list lodged with them, you can still be a trusted trader, it appears, without this list. You will have to provide that 6-digit commodity code. There is also an option for the authorities to require an 8-digit commodity code for certain products that they deem to be risky. So that's important to realize that that's the way the process is going to work. There's no supplementary declarations. That's a key. That's a key difference between what we're having to do now. If you operate with a TSS, you have a declaration at the frontier that's effectively based on your safety and security export declaration out of the UK. It's not an export declaration, but it's a safety and security message. And then you have to follow it up with a supplementary declaration. Within the green lane, as a trusted trader, there is no supplementary declaration. So we're using that commercial data to generate the data set that HMRC have to provide to the authorities in the EU, as well as use themselves for their risk analysis. As Becky suggested, food products and the movement of food will become much simpler. That's what we're being told. And we know that there are lots of food importers and retailers have had to reduce their range of products supplied within Northern Ireland because of that level of complexity. The government talks about, and I'll read it again, the fabled 500 certificates for a shipment becoming just one certificate and meeting UK requirements, and those UK requirements being accepted by the EU. There'll be no need for on-site veterinary checking, but there will be a need for not for EU labelling, and that's going to be brought in over time. UK government, it appears, will part fund that at the beginning, but we're going to have to see products have that label saying that the goods are not for EU. And of course, if you've got that label, that essentially means there'll be some kind of policing going on in terms of what happens to those goods. Think of it a bit like the tax stamp on a bottle of booze. And I know I've spoken about booze before. Maybe there's a theme here. Then we go into parcel shipments, and parcel shipments are quite interesting. Consumer to consumer parcel, sending a present directly to your Auntie Bridget in Ballyclare, will be exempt of any declaration process. That's great, but you'll be limited to a parcel being below 31.5 kilos in weight. So don't be sending her any breeze blocks, because that will end up causing lots of problems. Business to consumer movements will effectively be exempt from declarations at the border if they're sent via something called an authorized carrier. That's another new authorization process that shippers, fast parcel operators will have to go through. But again, there's a weight limit to that. A parcel can be no more than 100 kilos. And remember, that's e-com, that's business to consumer. It's a commercial process. The UK has agreed that those authorised parcel operators, authorised carriers, will manage a process of sharing data, and they'll share that in batches and to monitor and manage risks. Now, and it's the risk of smuggling into the EU. So it sounds a bit like there's something called the Memorandum of Understanding that a lot of UK fast parcel operators have signed up to with HMRC, where they undertake a lot of the processes. So this isn't new to them, and they will no doubt need to review data, parcels, shippers along the lines of what's called in the UK an anti-smuggling net. So they're going to have to control that through the anti-smuggling net. So what does this all mean? It's not, and we're trying to say here, is not a journey. It's a journey, not a destination. I'm getting myself confused. This is a process. We're not just going to be able to switch it on from day one. So the access to the trusted trader scheme is all about, as Becky was saying, compliance, processes, systems, good, clean data. And it doesn't matter how it's submitted and collated. That's going to come hopefully in the next few months. But it's all about having those processes in place. It's not a file and forget process. The draft law, and I call it law, allows HMRC to withdraw these authorizations where there are breaches of conditions. So you must keep on top of what you're doing. You can't just become a trusted trader, and it's exactly the same as authorized economic operator. You can't just become a trusted trader and just file it and forget it. You have to keep on top of it. The UK descriptions downplay customs data, but the EU descriptions of the process talk about commodity codes being important and additional data elements. So review and maintenance of that customs master data is absolutely still going to be required. It might be required. It absolutely will be. However you're going to build and deliver that data, you've got to build controls in to ensure there's accuracy. You know, an invoice turns into a data set. Let's make sure that that data actually works correctly. It's going to be easier than now. That's absolutely clear. And for food, much easier. That's what we're being told. But there's still a compliance burden, and you still need to prepare for it. As we say there on the slide, we don't think that moving goods from Warrington to Warren Point is going to be as easy as, say, Walsall to Wolverhampton. So you have to prepare.
Thanks, Lorenzo. And I think, you know, you're right. This is definitely a journey, not a destination. But, you know, the number of dry runs we undertook during Brexit, hopefully this will feel like a jog in the park in comparison to that. But, you know, the focus around data and process will absolutely be key for businesses starting to think about that now. And I can see questions coming in, and we will absolutely get to them, I promise. But enough about customs. Now we're going to hear from Frankie Devlin from KPMG in Northern Ireland, who's going to talk about the framework and what that means from a VAT perspective.
Thanks, Becky, and good afternoon, everyone. I think again, just as important to say that the Windsor Framework is focusing very much on the east-west movement of goods. So those GB to NI movements, and I suppose unintended consequences that arose in some instances for those movements under the protocol. So what the Windsor Framework is not seeking to do is to impact on movements of goods from Northern Ireland into the EU single market. I mean, I've been involved in a business Brexit working group in Northern Ireland for the last 3 years. So we've had many meetings with both UK officials, EC Commission officials, and really feeding in how the protocol was working, problems with it, things that were working well. So again, we think that the framework document has addressed a lot of the issues that businesses in Northern Ireland were putting forward as issues. It's still not perfect, but again, that's a consequence of having trade barriers. So specifically on the VAT then, And I suppose firstly, would the UK or EU VAT rules apply under the framework? So firstly, for supplies of services, there'd be no change from what we have today, because services were not included in the original protocol. So those rules would continue to be for services wholly under UK VAT rules. So no change there if and when the framework is implemented. For movements of goods and supplies of goods, which are obviously included within the protocol, the general position under the Windsor Framework would be, in my view, mainly unchanged. So what that would mean is Northern Ireland would continue to be part of the UK VAT area, and VAT would continue to be managed and operated in Northern Ireland by HMRC. So I suppose it would look and feel very much as it does today in terms of VAT returns compliance, all being dealt with by HMRC. However, as with the protocol, EU VAT rules will play a part and continue to play a part within the Windsor Framework. So the EU Principal VAT Directive would continue to apply for supplies of goods in and from Northern Ireland. And that's a really important point and a necessary point, because in order for Northern Ireland to be able to continue to trade freely with the EU single market, those EU VAT rules need to continue, and the Principal VAT Directive needs to have a role within that. So with the Windsor Framework, what it's seeking to do is looking at those areas of east-west trade and the areas that were giving rise to difficulties for Northern Ireland to trade within the UK internal market, and sort of carving out certain rules under the EU VAT rules and looking at specific areas which were giving problems, and basically saying, okay, do these particular rules have to apply going forward in Northern Ireland? And I suppose what they've come up with is a couple of different rule changes, which would mean that in certain instances and for certain types of goods and certain types of supplies from GB into NI, EU rules would not apply. But again, supplies to EU single market, full EU VAT rules would continue to apply. And as I've said, that's really critical for that full access to the single market for Northern Ireland movement of goods. So under the protocol, as you'll know, we've got this new system of XI VAT numbers that would continue to apply under the framework. EC sales lists and Intrastat reporting, so that would all continue for those movements of goods from Northern Ireland into the EU, and likewise from the EU back into Northern Ireland again. So if you're a GB business and you are moving goods from NI into the EU or EU into Northern Ireland, the rules would continue very much as they are today, and we've no reason to think they would change. So in terms of the very targeted VAT changes that the Windsor Framework have or would put in place whenever that is put into legislation, the first one relates to energy saving materials. And you might recall in the then Chancellor Rishi Sunak in the budget last year introduced a change whereby zero rating would apply to energy saving materials. That particular change couldn't be implemented in Northern Ireland because it's not, those supplies of goods are not specifically listed in the reduced or zero rating annex to the Principal VAT Directive under the EU. And because EU VAT rules apply in Northern Ireland, it couldn't be introduced in Northern Ireland. So that caused some consternation at the time. So under the framework, that issue would be addressed, and there would be a specific measure and specific legislation allowing for that zero rate to apply for the installation of energy saving materials in a movable property in Northern Ireland. So it's a really important point because it's in relation to where it's installed in a movable property in Northern Ireland. So again, it's that point again about the final use and consumption of the energy saving material would be in Northern Ireland. And again, what the EU want to prevent is the risk that those materials could move on into the EU, which obviously would be contrary to level playing field rules, which are really important within the Trade and Cooperation Agreement. So that's one of the first measures and changes that would happen. Another targeted measure concerns the number of reduced rates that you could have in Northern Ireland. So under the EU VAT rules, currently there's you can only have a 2 reduced VAT rates in the UK, in the EU. So if the UK want to bring in more reduced VAT rates, so if they could have multiple VAT rates, 5 or 6 reduced VAT rates, if they wanted to. So what this measure would mean is that Northern Ireland similarly could follow the UK changes and have those multiple UK reduced VAT rates applying in Northern Ireland. So again, that would mean that it would fix some of the potential issues which could arise going forward. In terms of a further point would be that under the EU VAT rules, the minimum reduced VAT rate that you can have is at the 5% rate. So you can't have a reduced VAT rate which is lower than 5%. This particular measure under the framework would mean that if the UK decided to have a reduced VAT rate of 3% or 4%, similarly Northern Ireland would be able to apply that reduced VAT rate, even though it would be contrary currently to EU VAT rules. So those are specific measures whereby Northern Ireland would be following the UK VAT rules very clearly in relation to VAT rates. Important to say, however, that within all of that, those changes would be monitored such that they don't give rise to, I mentioned earlier, level playing field implications. So for example, if there was a risk that a change in a rate might be give rise to some problems in relation to trade north and south, where those products might be moving into the south, that in that case may prevent such a change arising in Northern Ireland, but that would be something which would be monitored as things go along. So again, they're trying to ensure that there's no fraud, smuggling, those types of things which could happen across an open border between Northern Ireland and the Republic of Ireland. A further measure then would be that the UK and the EU have said they would look at establishing a list of goods, so a further list of goods which might mean that a reduced VAT rate could apply to them or a zero rate could apply to them if the UK wanted to apply such a rate to them. And if that was contrary to the EU VAT rules, again, they would look at that and they would say that could apply in Northern Ireland as long as the level playing field provisions are not being broken. In terms then of a further measure, second-hand vehicles, although that wasn't specifically mentioned in the framework document itself, and HMRC had actually sent out new guidance in relation to that probably about a month or 6 weeks ago. So again, although it's not specifically mentioned in the framework, it is something that the EU have agreed to, the EU. So you might recall that whenever the protocol came in, basically what it meant in relation to second-hand vehicles was that a Northern Ireland dealer couldn't bring GB-sourced cars or vehicles into Northern Ireland and sell them under the margin scheme, because the margin scheme would no longer apply to those cars because of EU VAT rules applying in Northern Ireland. So what the UK have been doing in the meantime is they've been applying a unilateral margin scheme in Northern Ireland under a grace period. So it wasn't a permanent solution. The EU didn't agree with it. So what this new scheme is, which I think is referred to as the VAT payment related scheme, it essentially will mean that from May 23, the margin scheme will no longer apply in Northern Ireland, but this other scheme will apply. And essentially it should give those dealers the same net result that they would have if they were applying the margin scheme. So there's a bit of VAT reporting that has to happen and a claim has to be made on your VAT return. But essentially it would get a dealer back into the situation where they can source those cars from GB and sell them effectively under an alternative to the margin scheme, but it gives them the same result. The final point I was going to just mention is under the framework, there's an enhanced coordination mechanism that is going to be set up. And essentially what that would mean is if there were proposals to change some EU VAT or excise rules in the future, this mechanism would look at those changes and look at how they might impact and be applied in Northern Ireland. And if they would be viewed as giving rise to problems in the same way that the energy saving materials issue would give rise to a problem, it may be the situation that the UK and the EU would agree that that change in EU VAT rules or excise rules would not have to apply in Northern Ireland. So again, I think that's a really important point in terms of Northern Ireland being able to control some of those potential outcomes going forward. So that's really all from me on VAT at this point, and I'm going to hand you back now to Becky. Thank you.
Thanks, Frankie. I think, some really practical insight there, and I can tell you now, as a customs person who's finds VAT pretty difficult, you've really helped me gauge a better understanding of that, what that means under the framework. And I think, probably a similar thing to customs in a way. I think it is really important that businesses start to map some of their financial flows as well, and consider if there are any other kind of systematic changes that need to take place too. So we've got to the end of our presentations. This is the bit everybody looks forward to, I'm sure. It's time for Q&A. We've got all your questions, and we'll be answering these, the ones that you sent us before the session, the ones that are coming in live. But if you do have any more as we go, please continue to kind of send them through via the chat panel, and we'll get through as many as we can today. So let me see. You have to bear with me. I'm on a different screen looking for these. So we've had an interesting question. I think actually Lorenzo and I, we've debated this before, haven't we? So can the panel explain the difference between red and green lanes for mixed loads, where some goods may stay in Northern Ireland and some may go further? So for example, can red and green lane goods be shipped on the same vehicle, and can technology recognise this, or is physical separation needed? I mean, Lorenzo, I can let you go first if you want.
First thing I should do is come off mute. That's a very good thing to do. So yeah, I think you've got to look at this as lowest common denominator. Clearly, we're going to have mixed shipments. Some of the items that will be at risk and therefore will be subject to the declaration process and control. Some of them will be part of this green lane process. I think there's going to have to, if you look at an example might be, and this is very paper-based rather than systems-based, if you look at in terms of the trade and cooperation agreement and statements on origin on invoices when we're moving goods from, say, the EU to the UK, it's as simple as adding an asterisk to products on an invoice list to say this is included, this is excluded, and it might be down to that sort of level that the control has to be exercised. Whether there is a technological solution to be able to have a physical shipment that's all in one lump and actually separate it and say to the authorities, this bit of the shipment you don't have to look at, and this bit of the shipment you do have to look at. I think that will come in time, but it's difficult to actually see it working. I think it's going to be down to bits of paper with notifications on them saying this is green lane, this is red lane type process.
So another question, so I can try and get through as many as I can. What does the parcel exemption mean for those carriers not on the approved list, but carrying goods for domestic customers or for parcels over the weight limits? So, for example, a domestic individual orders something on eBay, it weighs 2 ton, and it goes with a haulier that they use for commercial work. So, what's the customs process that should be followed? I mean, I'll take some of it. I don't know if you want to feed into it. Please feel free. The rest of the group. So, I think probably reading the draft decision on the withdrawal agreement on laying down the arrangements that relates to the Windsor Framework, if either the carrier is not an authorised carrier or the parcel does not fit within the definition of a parcel, so within the weight limit, the standard freight provisions of the Windsor Framework will probably apply. So, for example, if moved by a trusted trader and destined for Northern Ireland only, the 21-day development collection will apply. Don't know if anyone's got anything they want to add to that. Okay, I think one here for you, Tim. Do you think the Windsor Framework opens the door for greater cooperation with the EU in other areas?
So a pretty wide question, a very interesting one, and it's been talked about quite a lot on the media. I think we've all seen the change in the mood music, in the optics of the relationship between the UK and the EU, and the fact that it's now not anymore considered beyond the pale to actually have a friendly relationship with them. The ERG seem to have been kept quiet on this, although interestingly, this week's manoeuvres on small boats might somewhat counteract that. I do think there's quite a lot that. So it's pretty clear that we're not going to be rejoining the single market anytime soon, or the customs union. But within those constraints, I think it's pretty clear there are quite a few other things that, with a bit of political will on both sides, and on both sides being the important thing here, because a lot of them rely on the EU making life easier for us rather than vice versa. There are certain things that could be done that could help both businesses and individuals. I mean, to name a few of them that should not be beyond the realms of possibility: passport control for travellers around Europe. We don't really need full biometric passport checks, stamps, etc. That's something that has already been done on a bilateral basis. I could well imagine that there will be pressure to do that. Labour have talked about entering into a veterinary agreement if they get into power in a couple of years' time. Again, seems like something that can potentially be achieved outside single market. There's already obviously the possibility of the UK getting back properly into Horizon. I think that is going to happen because it's in the interest of both sides. And then the rest of it really depends on political will again. And I think there's actually quite a lot that the UK and the EU could do together to tackle migration or smuggling across the channel and small boats as well. So it'd be interesting to see if we see some of that. The other things that I think are a knock-on impact of both this agreement and also the fact that we haven't and are not going to get into any kind of comprehensive trade agreement with the US is it feels like as time goes on, the prospect or the ability of the UK and the EU to diverge significantly on regulations, on VAT rules and other areas without either causing a problem under this agreement and the Stormont break to be triggered, or just causing extra friction that no one really wants between the UK and the EU is sort of diminishing, and there's not the same driver for doing it as there would be if we, for example, had been negotiated hard into a free trade agreement with the US that required divergence. So to me, it feels like we're going to have to be following fairly parallel regulatory paths for some time.
Okay, so I think one for you, Lorenzo. If you are supplying a customer in Northern Ireland, how can you be sure those goods are not at risk of moving to the Republic of Ireland? I assume that if your customer is in Northern Ireland, it's the customer's issue if they subsequently supply those goods into the Republic of Ireland. And although, Lorenzo, I pose that to you, of course, Frankie, Tim, if you also would like to contribute, please feel free to jump in as well.
I think that the issues are effectively the same as now, i.e. the same as under the current protocol, but we've got a bit more flexibility and freedom in terms of UK entities being able to enter this trusted trader scheme. And it's all about offering goods for sale in Northern Ireland. Now, does that mean that the customer has to remain in Northern Ireland? And you just can't see that. People are going to move from the Republic into Northern Ireland and go to M&S, say in Belfast. They're going to buy products. They are sited in Northern Ireland at the point of purchase, and that's probably good enough. That's the words are quite loose within the draft decision. I don't think, you're not going to be able to put, we're still going to have effectively that UK trader scheme issue in terms of, are you in Northern Ireland? Can you prove that the goods are going to remain in Northern Ireland? The added flexibility is going to be of UK traders being able to enter that trusted trader arrangement, but it's about moving goods effectively into use and consumption in Northern Ireland, and it's going to be for them to actually prove that. I don't know, Frankie, if you've got any insight from your discussions on the ground.
Yeah, I mean, I would expect, but again, we probably do need a bit of clarity or confirmation on this one, that we will continue with the same situation we've had under the protocol, which is essentially goods that are moving into retail in Northern Ireland. So you've got retail stores in Northern Ireland, trusted traders, and within those stores, there'll be a requirement to have a not for EU label and advertising, we're told, within store. So again, if you're a store, if you're an Asda, a Tesco's, whatever, in Enniskillen, lots of people, depending on what they, where they want to shop, will travel from across the border and shop, do their daily, weekly shop in there. Maybe the choice is better. Maybe there's a better choice of booze, one of your pet topics, Lorenzo. So I would fully expect that would continue, because in terms of final consumption, I would think that the point is, if it's sold from a store in Northern Ireland, I mean, lots of people come up from Dublin, surprisingly, to Belfast to shop, sometimes because they come up and they want to stay for the weekend or stay the night. So if they go into a store and buy stuff in retail, there's only so much that you can do in terms of, saying, well, where are you from? Where are you going to, et cetera, et cetera. And again, it's all about risk. What is the risk of, if that person takes those products for their own consumption and, actually consumes them not in Northern Ireland. So I don't think that's the purpose of that point, and I expect that will continue, because that's just part of daily life in terms of the cross-border shopping experience.
So I think we've got time for one quick one. So Lorenzo, how can the UK aim to determine a 6-digit commodity code simply from goods descriptions, which vary significantly from product to product? I think for those in the customs world, will know how difficult that is.
I think this is going to be, in the weeds of the trusted trader scheme, and there will be a requirement that whatever goods description is sufficiently detailed to allow HMRC to do that classification. And there's a precedent for that within simplified procedures in the UK, what used to be called CFSP. At the point of import, you generate a simplified declaration that has no commodity code, but has to have a description. And that description has to be sufficiently detailed enough for a customs officer to be able to levy duty on that product. So it's got to be sufficiently detailed enough for that customs officer to generate a commodity code and then to issue an assessment for duty. So I think that's what they're going to do. They're going to say, right, just saying white t-shirt won't be enough. You're going to have to provide them with much more detail in terms of, this is a white cotton t-shirt, or this is a white t-shirt of man-made fibers, or whatever it might be. So I think that, it's that sort of detail that we expect to come out over the next few months, because if you look at the trusted trader scheme, the talk is that will begin in September this year. So that sort of level of detail has to come out from the authorities, and I think they're just going to say, you're going to have to give us enough sufficient detail to allow us to do that classification. If you don't, they'll probably push it back on you and say, you do the classification. So provide us with a list with the 6-digit commodity code, as opposed to us helping you. And that's the other thing. It's the EU saying that the UK authorities will help. And I haven't seen anything from the UK saying that they are going to help, or indeed how they're going to help with this classification process.
So thank you for everyone's questions. I'm conscious of time. hopefully we've answered some of those that were burning questions, but of course, if you've still got unanswered questions, please do get in contact. For those that we've received but we've not addressed yet, we will try our best to come back to you with answers to those questions. But before we finish today, I just wanted to ask each of you a key takeaway from today's session. So Frankie, perhaps I can come to you first.
Yeah, I mean, I think the key point for businesses, and again, as with the protocol, the way it should be looked at under the framework, assuming it is implemented, and I think from a Northern Ireland perspective, we fully expect that this is the deal, and life moves on and businesses move on. But I think the important thing is to look at it as not a one-off event. It's an evolving process, and there will be continuing challenges and issues that arise that nobody has even thought about at this stage. So going forward, with the new framework, with the improved relationship between the UK and the EU, they deal with those issues as they arise sensibly within the framework, the joint committee, the specialised committees, all of those things that are referred to, a lot of which already exists under the protocol. But again, because of that relationship, they're able to deal with them in a sensible manner, which continues to provide stability and certainty for businesses.
Thank you. And Lorenzo?
Even though the framework talks about simplification and reduction in complexity, it's all about the data. It's all about making sure whatever level that data is in terms of what we need to provide to the authorities, the key takeaway is just make sure we are compliant, make sure your data is as good and as clean as it can be, because that's going to reduce the level of HMRC or other authority intervention in what you're doing. So my message is it's all about the data.
Thanks. And finally, Tim.
So another non-technical one from me, I think, actually reflecting on the question about, well, what does this mean for future UK-EU cooperation? I think this does mark a line in the sand, and it's proof that I know some of the drivers for this were political, but actually a lot of it came from noise being made by traders who were having trouble with the GBNI border, and it shows that governments can and will listen. And so there's a whole world of, I think, greater cooperation and potential simplifications on trade that we could look at post-Brexit between the UK and the EU. Now might be the right time to start thinking about, well, what is it that you would like to get, and actually to start thinking properly about communicating that both to government here, but also to Brussels and European governments.
Thanks, Tim. So I think finally from me, let's plan ahead. I mean, it wasn't raining when Noah built the Ark, but you know how it goes. I think lots of time to plan before we reach the end of another transition period. So a big thank you to our speakers today, to Tim, Lorenzo, Frankie, and thanks for everyone for joining us today, and take care.